Hello friends, today we are going to do discussion on one of the important topics in GST, that is about the recovery provisions and the provisional attachment provisions. Now as far as the recovery is concerned, it is important to note about section 75 subsection 12 of the CGST Act. Now section 75 subsection 12 talks about self-assessed tax, wherein it mentions that if a person has already given the details of the tax liability in his return to be filed in GSTR 3B, and if he has not made the payment of tax, then the recovery provisions can be initiated immediately by virtue of section 79(1). Now it is very important that section 75(12) talks about self-assessed tax. Now self-assessed tax, it has been mentioned that is a tax where the assessee himself have incorporated the details of outward supplies in the return under section 39 but has not made the payment of the tax. Now very important to note that once somebody has put up the details in 3B, there's no question of 3B getting filed or the return getting filed without making the payment. So that entire section was drafted in the wrong spirit, which also gives a brings in very important question, is that whether really the law intended to block the GSTR 3B to be not to be allowing it to file without making the payment. But anyway, we are not going into that question. Now in the recent budget, that is in Finance Act 2021, they have brought in an amendment in section 75 subsection 12, wherein an explanation has been added. Now this explanation categorically says that in case for the purpose of this subsection, that is 75 subsection 12, the term self-assessed tax would also include those outward supplies, the details of which are given in GSTR 1, but it has not been incorporated in the GSTR 3B that has been filed in under section 39. Now what they are trying to do is that if you have filed GSTR 1 and if you have given the details of outward supplies in GSTR 1, but if you have not considered those details in your GSTR 3B and you have not made the payment of taxes on those outward supplies, then straight away even that would be considered as a self-assessed tax, and straight away the recovery proceedings can be initiated against this person under section 79. Now let me tell you, section 79 gives a vast power of recoveries, including attaching bank account and various other rights which the government has. Now I would like to bring in certain important aspects as to how an explanation can widen the provision or the main section, especially when the main section never intended to bring in GSTR 1 as to be categorized as self-assessed tax. Now it is very important to understand from this point of view that there have been a lot of Supreme Court judgments on these lines, which states that the scope of explanation can at the most be to explain the statutory provisions of the Act, to clarify the statutory provisions of the Act, to bring in a purpose to the statutory provision of the Act, or it must be read in a manner which harmonize the various statutory provisions of the Act. But when a statutory provision of the Act categorically states that self-assessed tax is only that which has been given under GSTR 3B, that is written under section 39, then how this explanation can go on to add and make the 75 subsection 12 wider is a very important question, which I would believe it to be certainly a legal anomaly in the drafting which has been made. Now second very important aspect which I would like to bring in is, how do anybody come to know that if somebody has been put some details are given in GSTR 1 but it has not been incorporated in GSTR 3B? The only way is to do a reconciliation between GSTR 1 and GSTR 3B. Now you must be knowing that this all reconciliation has been automated through various softwares, and you look at any client, almost any client, you would find that despite doing best of the compliances, there would always be some difference between GSTR1 and GSTR3B need not be because there is any short payment of tax or any excess payment of tax. It could also be because of the fact that certain tax for the previous year was paid in this financial year, or maybe some additional amount was paid because of a assessment being done at the time of annual returns or at the time of audit which was being carried out, or some spillover issues where the liability was although disclosed in GSTR1 in September, but it was paid in October, or vice versa. It can be inter-month or even inter-financial year spillover issues. Now, merely concluding that because there is a difference between GSTR1 and GSTR3B, there is a difference, and which is leading to a conclusion that the assessee has short paid because he has declared the details in GSTR1 and self-assessed and straight away going for the recovery provisions is the situation that is really creating a problem. Now let me tell you that on one hand, they are saying that the moment you put details in GSTR1, you need to make sure that you pay that taxes immediately. Now the question comes is that if, let us say, there is a taxpayer who does not have funds, although he is a good taxpayer, but at this point he does not have money, and he will certainly make the payment of taxes with interest given some time. Now, in that situation, how a business would survive is a very important question. You must be knowing that unless you put the details in GSTR1, your customer is not going to get input tax credit because it will not be reflected in his GSTR2A. Now, obviously, we would have to put details in GSTR1, but if you just block over there and say it is self-assessed tax and ask for payment of recovery provision straight away, then it is as good as stopping somebody's business. Another very important thing we must note is Article 301 of the Constitution of India and Article 302 of the Constitution of India. Now, Article 301 categorically states that any trade, commerce, or intercourse between throughout the territory of India is free. You really cannot put a restriction on the freedom of a citizen in doing trade or commerce. In fact, Article 302 categorically says that some restrictions can be put on the trade or commerce, but that is something which should be there in the public interest. It cannot be in the interest of revenue. Now, if you ask me, straight away invoking recovery provisions, suspending the GST registration without waiting for the due course of justice to take place, and making the law in such a way that assessee actually cannot supply goods or services, it is actually straight away a restriction in the freedom of a person in doing the trade or commerce, because unless you have a GST registration, nobody is going to accept the goods or services. The customer is not going to keep quiet if the details are not reflected in his GSTR2A. So in my view, it certainly goes beyond Article 301 and 302 of the Constitution of India. The restriction which is there in 302 is only in the public interest. I would like to close my discussion on one very important statement made by the great Martin Luther King, who has mentioned that any injustice anywhere is a threat to justice everywhere. It is very important that in the garb of trying to showcase all these arrests and everything in a big way, it should not so happen that somebody who is innocent is being facing all these problems. We have seen at least a lot of taxpayers I have seen who are genuinely doing business, but their registrations being cancelled only because they couldn't make the payment of taxes for 2 to 3 months, or they couldn't bear the interest cost at that point of time. So I hope that the GST law in spirit would become good and simple tax. And with this, I would like to close my discussion. I would like to thank you all for patient listening, and I would be coming up with more such short videos on critical aspects of GST. Thank you very much.